A fair few headwinds have been buffeting the Eurozone economy over the last 12 months or so, but they are increasingly likely to turn to economic tailwinds as we move into 2026. Of course, perhaps the most obvious of these headwinds is trade relations with the United States, though the implementation of a US-EU trade deal, which was agreed last summer, has of course alleviated a significant degree of uncertainty on that front. Meanwhile, on the fiscal front, we are likely to see significantly looser fiscal policies in Germany next year, not only in terms of increased defence and infrastructure spending, but with tax breaks on the horizon as well. That should provide a boost to consumption in the Eurozone's economic engine room. And then, of course, you've got the continued lagged effects of the ECB's monetary easing, the deposit rate now standing at 2%. The long and variable lags with which policy easing operates are likely to provide a further helping hand to the Eurozone economy, which is likely to reach potential growth towards the back end of next year. Speaking of the ECB, it does seem as if the easing cycle is now done and dusted with the deposit rate at 2%. For the time being, at least, policymakers are not particularly concerned about the staff macroeconomic projections, forecasting an inflation undershoot in both 2026 and in 2027, and you'd likely need a material downturn in economic growth to force policymakers into lowering the deposit rate further. On the subject of inflation, we are likely to see headline prices fall significantly below the 2% target early next year, though that will largely be down to a disinflationary base effect from energy prices. And there are still risks of inflation persistence, with services inflation having now risen for 3 months in a row. Although, having said that, the labour market remains resilient as well, although employees' bargaining power on pay does seem to be fading, which could allay some concerns on that front among ECB policymakers, though the relatively low unemployment rate should also continue to boost consumption as we move through the next 12 months. That said, risks do remain on the horizon. Politically, of course, France remains very, very fragile as fiscal consolidation continues. Not only that, but we also are beginning to turn our attention to elections in France, in Italy, and in Spain in 2027. While, of course, there remains a risk of renewed trade tensions with the United States, depending on how relations between the EU and President Trump evolve. And last but by no means least, there are geopolitical risks on the horizon too, amid a continued lack of progress on a sustainable peace deal or truce in the conflicts between Russia and Ukraine. A full outlook for the Eurozone economy in 2026 can be found on the Pepperstone Research website.